RBI's long-term repo operation prompted a lot of companies to issue bonds as yields fell as soon as the RBI governor made the announcement. Advait is here with some details around this as well. Advait, good morning. What do you have for us?
Good morning, Meeraj. So on the 7th of February this month at its monetary policy meeting, the RBI had announced that it would conduct 1 year and 3 year long-term repo operations. Essentially what this means is a bank can avail finance up to rupees 1 lakh crore for a longer term, so 1 year or 3 year at the current rate. So regardless of what the repo rate moves up over the next course of the next 1 year or 3 years, the banks have funding at this rate during these auctions that the RBI has conducted. So far, it's conducted 2 auctions. Last week, on the 17th of February, it infused 25,000 crores. Yesterday, it infused another 25,000 crores through these options. Essentially, the bond market saw this as a good move from the RBI from its operation to a similar strategy to kind of manage bond yields. Essentially, the RBI, by unloading this liquidity onto the market, is trying to push the yields down, especially for the 1 year, 3 year, and 5 year buckets. So what happens is the yields move down, which becomes more attractive for borrowers to come into the market. So on the 7th of February, the RBI announced this LTRO facility, and the following week, bond markets issuances suddenly skyrocket. So between the week the RBI announced and last week, totally about 64,000 crores worth of bonds were issued, compared to about 24,000 crores last year. But last year, you have to understand it's post-ILFS, so there's a base effect issue there. Now, the majority of issues have taken place in the week before the first auction, which means the market had front-ended it. And last week were 2 public holidays, so we saw out of the 15 local bond issuances, 13 of them took place on Monday, the day of the auction itself. So what bond investors and experts say that is that the LTRO has helped push yields down, make it more attractive for these bond investors to buy some of the known names. And we've seen a host of companies from NBFCs, industrial companies, as well as larger institutions, corporate groups also buying into issuing bonds over the last 2 weeks. But ultimately, whether the second round effects of the LTRO operations, which is to boost credit, will actually play out, there's still some time to see that take place.
Are people saying that there could be more, or was this a tactical move because of this announcement and the dip that we saw in the yields? Because I do remember that from 6.50 on the day of the policy, the yields went down to almost 6.34 before bouncing back a bit. So was this tactical to bunch it up, or or are people expecting, maybe not in the same vein, but more bond issuances in the coming weeks?
I think, if you've seen how bond markets have played out, regardless of what all the announcements have taken place over the past 3 months from a policy perspective. In December, you had Operation Twist, then the budget, the government had announced the hike in the FPI limits. Now there's the LTRO move. The bond markets tend to factor in this earlier than the actual date of when these policy announcements take place. So it seems like these bonds are there to be issued, they're in the pipeline, and so these events happen to be good triggers for, so as soon as the yields fall, might as well issue then wait for them to rise up again on.
So not quite certainty about whether the same vein would continue or no, but a large portion.
It's unknown because the LTRO operations are total for 1 lakh crore, and so far 50,000 crores is already completed. So when I asked bond experts this, like, once the auctions run out, do you see yields jumping back up? They said hopefully it doesn't, because at least the 1, 3, 5 year buckets show that the risk aversion that the market had is reversing certainly, and also the companies are also being priced at a much reasonable rate compared to last year. So the credit risk aversion and those factors are also taking place, playing out in the minds of investors.